A very good afternoon to everyone. I, CA Sakshi Jaiswal from Gorakhpur branch, am the moderator of today's webinar. I am delighted to welcome you all the participants and our two esteemed speakers, CA Jiten Mahen Trivedi sir and Advocate CA Prakash Sinha sir, in the webinar being organized by Continuing Professional Education Committee of ICI. I would also like to convey my special thanks to CA Gyanchand Mishra sir, Vice Chairman of CP Committee, for providing me this wonderful opportunity of being the moderator of today's webinar. It's my pleasure to be a moderator for the webinar on India's 41 and recent changes in income tax. In a short while, we will start this webinar. First, I would like to apprise you about the CPE committee. The role of a chartered accountant is evolving continuously to accept newer responsibilities in a dynamic global environment. The future of CA profession depends on being flexible and open to innovation. Therefore, the need of the hour is to innovate as per the requisites of the contemporary business environment and accordingly upgrade the curriculum and education system of the chartered accountancy course. The committee also believes that members of ICI should look beyond the traditional areas of practice and seek and explore new areas of business and profession. And hence, the CPE committee is mentoring the members by providing guidance through various workshops, seminar, national conferences, background materials, etc. And simultaneously by encouraging young and dynamic professionals to grow as speaker, master of ceremonies, etc. in CPE programs. The program for this evening is as follows. We have two sessions of 1 hour each, and the topic of today's webinar is India's 41 and the recent changes under income tax. Our eminent speakers will talk about above mentioned two emerging areas of professional interest. Now, let's move towards the first session of today's webinar, that is on India's 41. This session will be taken over by our eminent speaker, CA Jiten Mahendra Trivedi sir. Sir has received gold medal for securing 100% marks in the accountancy CA inter exams. He has a vast experience of 12 years in the finance and accounts, India's implementation, statutory audit, internal audit, etc. He has taught more than 10,000 students and has also received various awards and recognition as best speaker at various institutes. At present, we have total number of approx 350 participants who have joined the webinar. Now I request CA Jiten Mahen Trivedi sir to please start this session. Over to you, sir.
Thank you so much, Sakshi. I would first like to extend my gratitude towards the CPE committee of the Institute of Chartered Accountants of India, our respected CCM, Purushottam Khandelwal ji and Gyan Mishra ji, for allowing me the opportunity to share my knowledge along with all of you, and a warm welcome to one and all. And the first topic for the day is nothing but India's 41. The reason of choosing this topic was this is an India's which has not been a part of the earlier accounting standards. And so let's discuss a standard which was not there as accounting standards or Indian GAAP, but which is there as a part of our India's thing. Just before I start, am I audible, Sakshi? Can you just give me a confirmation? I'm audible, right? Okay. Thank you. So this is The topic for the day, Ind AS 41, which is nothing but agriculture accounting. And before we progress, as always, we say that a statutory warning, a disclaimer that whatever material presentation which is there as a part of the PPT which I'm going to share is only for the sole use of educational programs. The views are expressed are mine on the basis of understanding which I carry, and it has nothing to do with the views of the committee or the Institute of Chartered Accountants of India. See, whenever we go with any Ind AS, the first thing which we always talk about is what? It is nothing but objective. Usually, we always say that any Ind AS will have some objective, some scope, some measurement, some presentation, and some disclosure. This is what broadly any Ind AS or any AS, rather in that way, any standard will have. So what is the objective of Ind AS 41? The first one is prescribing the accounting treatment. And number two, to give the disclosures related to the agriculture activities. Again, as we move forward, we are talking about agriculture accounting. So the first is nothing but to give an accounting treatment. And number two is to disclose. So these are the two broad things which we are going to discuss in the entire session today. It's the scope of Ind AS 41 about the agriculture activity. It includes three things. It covers the following three things. What are biological assets? What is the meaning of agricultural produce at the point of harvest? And number three, the government grants which are involving the biological assets. So the first one is only biological asset. The second one which you are talking about is the agricultural produce at the time of harvest. The most important word is at the point of harvest. And number three is government grants, but only related to biological assets. So let's first understand what are biological assets, what are agricultural produce, and what are the government grants related to it. Before we go to the scope, we specifically will like to say that the produce growing on bearer plants, for example, tea leaves, grapes, oil palm, fruit, latex, remains within the scope of Ind AS 41. So I'm talking about the produce. I'm not talking about the bearer plants. For example, a mango tree is there, and it's the season of summer, and there are some mangoes which are hanging on the mango tree. I'm talking about the mango which is hanging on the mango tree, but I'm not talking about mango tree as a whole, because mango tree will be a bearer plant, and the mangoes which are hanging will be nothing but the fruits which are at the point of harvest. I go back. We're going to talk about three things: biological assets, sheep, goat, etc. Whatever you can say, animals which are used in the business. For example, cow or buffalo which is used to give milk by a dairy industry or by a dairy company will be nothing but a biological asset. Agriculture produce at the point of harvest. I'm not talking about the mango tree. I'm talking about the mango which is hanging on the mango tree at the point of harvest. And number three, the government grants involving the biological assets. The produce growing on a bearer plant. Is mango tree a scope of Ind AS 41? Answer is no. Is the plant, the fruit of the mango tree, a part of or it will be covered by the scope of Ind AS 41? The answer is yes. The grapes which are hanging on the grapevine plantation, you can say thing, will be a part of Ind AS 41? Yes. Ind AS 41 does not cover. What will it not cover? Land related to the agriculture activity. It does not cover the farm. It does not cover the farm. Reason is very clear. Land is nothing but, you can say, an fixed asset, or in our normal parlance language, we can use the word PPE. And when we talk about PPE, it will be going to Ind AS 16. Second, bearer plants. It does not cover the mango plant, because again, it will be forming the definition of PPE. What is the definition of an asset as per PPE? Any asset which will be giving you any economic benefit in future, which has some economical value, and whose use is not restricted to one accounting period or one financial year in common language. So the mango tree will be forming part of fixed assets, or we can say PPE, but the mango which is hanging is the, you can say, fruit at the time of harvest, and that will be falling in the scope of IND AS 41. Government grants related to the bearer plants. If bearer plant cannot be considered, then even the government grant related to the bearer plant cannot be considered. If biological asset can be considered, then the government grant related to the biological asset should also be considered. And that's why the 3 points which included were biological asset, the fruits, or you can say the produce, agriculture produce at the time of harvest, and the most important was government grant related to the biological asset. Bearer plant is not included, so the government grant is also not included. And most important, the agriculture produced after the point of harvest is also not included. It means the mango will be treated and dealt as per IND AS 41 till it is hanging on the tree, but the moment it comes down from the tree, that will not be treated as per IND AS 41. Same way, you can take any orchid flower, you can say any fruits, let's say apple tree, till the apple is hanging, it will be treated as a part of IND AS 41. The apple falls down or it is harvested, it is removed, it will not be treated as a part of IND AS 41 because it is after the point of harvest. Till the crops are on the plant, it will be part of IND AS 41. The moment you will remove them, they will become inventory, and it will not be from the scope of, it will not be covered by the scope of IND AS 41, but it will be covered definitely in the scope of IND AS 2. So now we go to the definition after I have given you a brief about what is biological asset, what are the, you can say, fruits or the agriculture produce at the time of harvest, and of course the government grant on the biological assets. The first point of the definition is agriculture activity is defined as the management by an entity of. So what is the meaning of the word agriculture activity? It is nothing but the management by an entity of biological transformation and harvest of biological assets. Biological transformation and harvest of biological assets for either sale or for conversion into agricultural produce or for conversion into additional biological assets. I repeat, biological transformation and harvest of biological assets, either for selling the asset or for conversion into agriculture produce or for conversion into additional biological asset. What is the meaning of the word biological transformation? It should happen naturally. It should not be man-made. It should be a biological process. And harvest of biological assets. Example, plants which are growing. We add manure, we add water, the sunlight comes. But the transformation which is taking place is not a man-made process. It's a biological process. And harvest of the biological assets for sale. Number two, for conversion into agriculture produce. So we want to convert it so that we can get an agriculture produce, or for conversion into additional biological assets. For example, if you talk about raising the livestock, let's say chicken. Either chicken is for selling or conversion into an agriculture produce or for conversion to additional biological assets. Either the chicken can be sold or used to give you eggs or to give you chicken, which can be sold in further. Forestry. Annual or perennial cropping, either the annual crops or pre-annual crops. It may be continuous growing, or it can be a rabi crop or a kharif crop, just as we talk about winter crops or monsoon crops. Cultivating orchards and plantations. Floriculture and aquaculture, even fish farming. You are growing the fishes so that they multiply and ultimately you get additional fishes, because that is nothing but biological transformation, either for selling the fish or for conversion into agriculture produce. That won't happen in that place, but for getting additional biological assets. The biological assets used not as agriculture activity, for instance, for transportation, recreation, are not covered. What does this mean? If I use ship to give me wool, will it be covered under agriculture activity? The answer is yes. But if I use ship to transport something, rarely used, but let's say for transporting something, will it be covered under Ind AS 41? Answer is no. If I use camel to get the camel wool or the camel skin, it will be covered under Ind AS 41. But if I use camel so that I can transfer it from one place to the other, it will not. If I use camel for getting milk out of it, it will be covered as a part of Ind AS 41. But if I use camel so that I can go from one place to the other, or it is used at a place where tourists come and we charge 100, 200, 300, 500 rupees for the rides, then it will not be treated as a part of Ind AS 41. It will be going as a part of Ind AS 16, because there it will meet the definition as per PPE. And it will be removed from the definition of Ind AS 41. Why will it be removed from the definition of Ind AS 41? It's a biological asset. Yes, camel is a biological asset. But important was, it should be either for selling, it will not be for selling, or for conversion into agriculture produce. It will not be for giving into agriculture produce or for conversion to additional biological asset. So it will not qualify as an agriculture activity. If it is giving milk, it will qualify for giving an agriculture activity. That's where the thin line of difference is. And that's what will decide whether it will be falling under Ind AS 41 or whether it will be going as a part of Ind AS 16. If it is Ind AS 41, the accounting treatment will be as per Ind AS 41. And if it is Ind AS 16, then the accounting treatment will be entirely as per Ind AS 16. So let's recapitulate just in a short span what we have covered so far before we move forward. And in between, I'll wait for 2 minutes if someone has a doubt and they want to write. Is it allowed that they can write a doubt and I need to answer or something? Yes. So I'll wait for a couple of minutes. I'll just go through the first 6, 7 slides, because we are now in the definition. The definition, if it is clear, then only we will be able to understand that whether the accounting treatment will be applicable to it or not. So first, what was the main objective? To decide the accounting treatment and disclosures. Accounting treatment होगा तो ही तो disclosure आएगा. So पहले accounting treatment किसका? Biological assets or the agriculture produce which is there at the point of harvest, or the government grants involved in the biological assets. Scope, it covers the produce on the bearer plant, but it does not cover the bearer. It covers the produce on the land, agricultural land, but does not cover the agricultural land. It covers the grapes, oil palm, fruits, latex, etc., which is there on the bearer plant, but does not cover the bearer. It does not cover the land. It does not cover the bearer plant. It does not cover the government grant for the bearer plant and the agriculture produce after the point of harvest. The agriculture activity is defined as a management activity where you are either biologically transforming or harvesting, of biological assets for either sale or for conversion into agriculture produce or for conversion to additional biological assets. Examples are livestock, forestry, animal cultivation, floriculture, and aquaculture. Biological assets used not as agriculture activity, like for transporting, etc., as I said, camel will not be falling as a part of agriculture activity. Biological transformation comprises of the process of growth, degeneration, production, procreation that cause qualitative or quantitative changes in the biological asset. Example, a number of cows and buffaloes are you can say kept together so that they give birth to new cows, which will in turn give you milk, will be falling as a part of the scope of Ind AS 41. So biological asset is a living animal, or it can even be plant, just for clarification. That biological asset can also be plant, because plants also grow. They also give you agriculture produce. So they are meeting the definition of biological asset as per Ind AS 41. So this is the summary of what will be considered, what will not be considered. And before we move further, if there is any doubt, I'll just wait for a minute.
Sir, at present there are no queries, so you can move ahead.
Okay. What is the meaning of the word harvest? The detachment of produce from a biological asset or cessation of a biological asset, life processes, for example, picking fruits from the trees. That is the meaning of the word harvest. Harvest is nothing but to remove the, you can say, fruit or whatever from the tree. So that's a very simple definition. What is agriculture produce? The harvested product of entities' biological assets, for example, picked fruits, picked grains, etc., which are nothing but the agriculture produce. So the mango will be the agriculture produce. अच्छा, एक छोटा सा example ले लेते हैं. The land on which mango trees are, the orchid farm in which the mango trees are, will that land be covered as a part of Ind AS 41? The answer is no. It is land. It will be covered under PPE Ind AS 16. The mango tree which is standing, will that be covered as a part of Ind AS 41? The answer is no, because again it's a bearer plant, so it will again be going to the definition of Ind AS 16. The mango which is hanging on the mango tree, will that be covered as a part of agriculture produce? The answer is yes. So that will be covered as a part of Ind AS 41. The mango which is fallen from the mango tree, whether it will be covered as a part of Ind AS 41? The answer is no, because that's a fallen thing. So it has converted into the inventory and it will be going as a part of Ind AS 2. So a small example of mango can help us to understand this complex things written at times in an easier way. So going through examples of biological assets, agriculture produce, and products that are the result of processing after harvest. For example, sheep is a biological asset. What is the agriculture produce which you get? Woolen. And what are the products that are made out of the processing after the harvest? You can say carpets or maybe sweaters or whatever you can make out of wool. Trees in a timber plantation. What is the agriculture produce? The felled trees which gives you logs, the trunks which are used as logs. And what are the products that are there as a result after the processing? Maybe lumber, maybe some furniture. Dairy cattle, agriculture produce is nothing but milk. What is the processed thing? Anything which comes out of milk, maybe butter, maybe cheese, maybe paneer, whatever. Sugarcane, what is the produce? The cane, harvested canes. And what are the product which you get? Either jaggery or the sugar. Tea bushes, you get the leaves. And ultimately, what is the produce you get? You can make tea out of it. Same as grapevines are the biological assets. Picked grapes are the produce, and the wine which is made after further processing of the grapes can be the further product. The rubber trees, the harvested latex, I hope you know the raw form of rubber, and then the various rubber products which are made out of, you can say, the harvest. So more examples. Tobacco plant, is it a biological asset? Yes. Is it a bearer plant? Yes. So if it is a biological asset and a bearer plant, will it be covered as a part of India's 41? The answer is no, but it can only be covered about the product which is going to be there. Trees in a timber plantation is a biological asset. Yes. Is it a bearer plant? No, because it is timber. It does not give you fruits. It will only give you the logs. Dairy cattle, is it a biological asset? Yes. Is it a bearer plant? It's not a plant. It is a biological asset giving you milk, yes. Maybe in wool, yes. But it is not a plant. So definitely it's not a bearer plant. So will it be forming part of India's 41? The answer is absolutely yes. Fruit trees, whether it's a biological asset, yes. Whether it's a bearer plant, yes. And as a result, will it be forming part of India's 41? Answer is no. Only the fruit hanging till not harvested will be covered under India's 41. Grapevines, yes. Bearer plant, yes. The grapes which will be there, they will be India's 41. Sheep is a biological asset. Is it a bearer plant? No. So wool will become the inventory after it is removed, but till that wool is there on the ship, it will be forming part of India's 41. Rubber trees, biological assets, yes. Bearer plants, also yes. The latex, till it is there on the plant, will be India's 41. After it is removed, taken out, then definitely it will be going as a part of India's 2. Examples of biological assets, agriculture produce and products that are the result of the processing after harvest continued. Biological assets held for produce, example bushes and sheep. Why do we keep tea bushes? So that we can get the tea leaves. Why do we keep the sheep? So that we can get the wool. Produce growing on biological assets for consumption, example tea leaves and wool. And products that are the results of processing, that is nothing but the tea powder or the tea, what do you say, tea, the small tea portions or the carpets governed by other standards, nothing but that covered under IND AS-2. So when talk about tea, after harvesting has taken place, that it has been removed from the leaves, the powder form of tea which you get in the market for making the tea at home or office, that is nothing but will be covered as a part of Index 2 because it will become part of inventory. Same way will happen with the carpet which is made from the wood. Bearer plants under Index 16. Index 16 is applicable to bearer plants as self-constructed items of PPE. Reference to construction covers activities necessary to cultivate bearer plants. Produce growing on the bearer plant is not covered. Again, as I clearly told you, the mango tree will be forming part of bearer plant. It will be forming part of Index 16. But the mango which is there on the mango tree will not be forming part of Index 16. It will be forming part of Index 41. So that's just an example here. What is bearer plant? I hope you all know the plant which is used so that it can give you something out of it. A bearer plant is a living plant that is used in the production or supply of agriculture produce, expected to bear produce for more than one period. Because if it is only for one period, then it is nothing but wood which is going on the, you can say, tree. Once the entire wood is removed, the entire tree is demolished. Then it cannot be bearer plant. Because bearer plant means a tree which is going to give you production for more than one accounting period. Mangoes come every summer. They do not come only 1 year. They come year after year after year for at least 5 years or 10 years, depending upon what kind of mangoes are going on the tree. So it is used in the production or supply of agriculture produce. It is expected to bear produce for more than one period and has remote likelihood of being sold as agriculture produce. It means the chances of selling the plant is very minimal. We don't sell mango tree. What we sell is nothing but the mangoes. We are not supposed to sell the plant. The chances of selling the plant are minimum. जो भी सौदा होगा, जो भी सेल होगा, वो सिर्फ उसके बेरर फ्रूट का होगा. So bearer plant is a living plant that is used in the production or supply of agriculture produce, expected to bear produce for more than one period, and has remote likelihood of being sold as agriculture produce, except for incidental services. Excuse me. Example: tea bushes, grapevines, oil palms, and rubber trees. Our intention is that the tea leaves will come every year. We are not going to sell the tea bushes, grape vines. We will have grapes coming every season or after every fixed period. Same with the palm trees and same with the rubber trees. The latex will keep on coming. We are not going to demolish the entire tree. Following are not bearer plants. Plants cultivated to be harvested as agriculture produce. That is, tree grown only for the use as lumber, because it will not give you product for more than one period. It will only be giving you product for one period. Plants held for use in the production or supply of agricultural produce that are also intended to be harvested as agricultural produce or sold as living plants other than incidental sales, trees that are cultivated both for fruits as well as the lumber. Because you are going to get the only product for one period. If it is not going to give you product for more than one period, it cannot be treated. It cannot be treated as you can say agricultural produce for India's 41. Annual crops, maize and wheat, produce growing on a bearer plant. So we are very clear now with what is bearer plant and with what is agriculture produce. Bearer plants, their initial measurement will happen at cost, and the subsequent measurement will happen as per cost or revaluation. That is nothing but fair value as per India 16. The consequently, after recognition, cost model may be followed for bearer plants. Of course, whenever you follow cost, we are talking about PPE, there will either be number one, depreciation, or there will be nothing but you can say impairment under India's 36. Whatever is a fixed asset, whatever is a PPE will be always subject to either in depreciation or impairment, depending upon it's a depreciable asset or not. We are talking about bearer plant. It is not India's 41 which is hitting it, it is India's 16 which is hitting it. And so it will be covered with depreciation as well as impairment. The accounting for bearer plant. Think, if it is a fixed asset, how do you account for? You always account a fixed asset at cost. So all the expenditure related to the fixed asset before it is put to use are added to the cost of the fixed asset. Same way, all the expenditure for the production before the plant starts giving you the bearing, you can say fruit, it will be added to the cost of the bearer plant. So before reaching production stage, very important, production stage or maturity, whatever cost has been incurred on the bearer plant, that will be added to the cost of the bearer plant, would be treated as a self-constructed property. That is cost accumulated on ongoing basis until the plant reaches maturity. Before it start giving you the bearer fruit or whatever is the outcome of that particular plant, before it gives you that agriculture produce, all the cost will be added to that asset, will be added to the cost of the bearer plant. That is a general, you can say, thing which we follow even in the case of India 16 for all the PPE items. Classification of PPE. As per India 16, a class of PPE is grouping of assets of a similar nature and used in entities operations. Again, why we are going into PPE? Because we have to have a demarcation between what is under 16 and what is under 41. So as per India 16, a class of PPE is a grouping of assets of a similar nature and used in an entity's operation. So it has to be similar because we do class-wise classification of the PPE items. As per India 16, bearer plants and land on which they are planted are separate classes of PPE. Land is a separate class and the bearer plant is a separate class. Both are India 16? Yes. Are they the same class? No. So will they be shown as a clubbed item? No. They'll be segregated. What is the cost of land and what is the cost of the bearer? Accordingly, bearer plants and land are accounted separately. The cost of land will go for the you can say class of land, and the cost for the bearer plant will be nothing but the cost of the bearer plant. Depreciation on the bearer plant. India 16 provides for component accounting, that is, where cost of a part is significant in relation to the total cost of the item and has different useful life, it shall be depreciated separately. Can I say that I will not depreciate the bearer plant because land is non-depreciable? The answer is no. Land has an unlimited useful life. You are not depreciating. Okay. The bearer plant is a different class. Yes. Does it have unlimited useful life? No. Maybe the mango tree is going to give you fruits for 10 years. Then definitely the depreciation should have take place for the bearer tree for nothing but 10 years. If your estimate is 15 years, it should be depreciated 15 years and accordingly. So India 16 provides for component accounting, where the cost of a part is significant in relation to the total cost of the item and has different useful life. It should be depreciated separately. Examples in tea plantation. There are tea bushes and the shade trees. If you have ever gone to the tea plantation, then there will be tea plantations and there will be some shade trees so that they don't get the direct sunlight. Can I treat both these as a same class? Answer is no. They have different uses. They have different life. As a result, the cost should be depreciated differently. The life of the shade tree differs from the life of tea bushes for which it has grown. Accordingly, tea bushes and shade trees are depreciated separately. Let's assume the shade tree is going to be there for 20 years, then the depreciation will happen for over a period of 20 years. And if the tea bush is going to give you teas for 5 years, then the depreciation of the cost will only happen over a period of 5 years. Now, we have a case study. Let's say entity A raises cattle, slaughters them at its abattoirs, and sells the carcasses to the local meat market. Which of these activities are in the scope of Ind AS 41? First of all, the cattle are biological assets while they are living. So till they are living, they are under the scope of Ind AS 41. But when they are slaughtered, when they are already slaughtered, the biological transformation ceases. What is important for being a biological asset? It should have a biological transformation going on, natural. Maar diya, kaat diya, the biological transformation is seizing it. And the carcasses meet the definition of agriculture produce till it is, cut. Hence, a entity should account for the, you can say, live cattle as a non-current asset in accordance with Ind AS 41, and the carcasses as inventory in accordance with Ind AS 2. Till you are not killing the cattle, 41. After the cattle is killed, the meat is taken out, definitely it will become your inventory and it will go to Ind AS 2. Entity B grows vines, harvests the grapes, and produces wine. Which of these activities are under the scope of Ind AS 41? The grape vines are bearer plants that are going to give you crops continuously. As a result, the grape vines cannot be treated as Ind AS 41. But when the entity harvests the grapes, their biological transformation ceases and they become agricultural produce. Assets such as wine that are not subject to biological transformation, hence are not biological assets. These processes are analogous to the conversion of raw material to finished good rather than biological transformations. So you cannot say that इसमें से wine बनने वाला है. अरे wine naturally नहीं बनेगा. First, the grape will become rotten, then you are going to do some process so that you can get the wine. So it's not going to be a biological transformation happening on its own. So the grape vines are Ind AS 16. The grapes which are there on the grape vines are Ind AS 41. But once you take out the grapes, they become part of Ind AS 2. Therefore, the entity should account for the grape vines in accordance with the Ind AS 16 and the harvested grapes, the production of wine as inventory, and that is why it will be falling under the scope of Ind AS 2. Biological assets include produce growing on bearer or agricultural produce are recognized as an asset when the following criteria are met. The entity controls the asset. It should be your asset. You should be, you can say, controlling the asset. In fact, it is your asset only when you can control, because the prerequisition of a definition of asset, the prerequisition of the definition of an asset says that you should be able to control it. It is probable that future economic benefits associated with the asset will flow. That is the thing, but the definition, which is again there in AS-16, fixed asset के लिए चाहिए. And the fair value or the cost of the asset can be reliably measured, because if it cannot be reliably measured, if you cannot have the fair value or the cost value, then how will it be forming part of your balance sheet? And if it cannot have forming part of your balance sheet, how can we say it is an asset? Example. Let's say we get a small calf out of the cow. How will you get the cost value of the calf? Very difficult, in fact, next to impossible. But does it have a fair value in the market? The answer is yes. So I am saying either the fair value or the cost of the asset can be reliably measured. If either of them can be measured, it will be forming part of my IND AS-41. So first we talked about what are to be covered under IND AS-41. And now we are talking about how we are going to recognize. So we are talking about the accounting treatment. As I always say, that any IND AS will usually have objective, scope, and RMPD. Objective, scope, R for recognition, M for measurement, P for presentation, D for disclosures. So we decided the objective, we decided the scope, we have understood the definitions. Now we are talking about what is to be recognized, and then we will decide how it is to be recognized. That is, how is it to be measured. So first, we should be able to control the asset. There should be future economic benefits out of the asset, and we should be able to have either the cost value or the fair market value of the asset. Control can be evidenced by legal ownership of a cattle or marking of the cattle on acquisition, the bulk mark, etc., which are kept by some dairies, etc. Biological assets are measured initially and at each reporting date at fair value less cost to sale. What is fair value? For the definition of fair value, you have to go to IND AS-113, where you are going to talk about the fair valuations. So fair valuation, nothing but the market value. It's not the entity specific value, but it is the value in general. So the biological assets are initially measured at, and each reporting period, they are always valued at fair value less cost to sale. Example, we have a cow whose fair value is 50,000, but to sell it, I need to give 2,000 as a commission to the agent. Then the fair value to be accounted for in the books will be 48,000, which is nothing but 50,000 less cost to sell 2,000. Any increase or decrease in the fair value recognized in the statement as P&L. It means any profit or loss arising due to the change in the fair value will be accounted directly in the profit and loss account. Example, last year there were one cow having market value 50,000, less cost to sell 2,000. So fair value 48,000. After a year, it started giving more milk, and the fair market value for such kind of cow has become 70,000. Then the cost of sale is, let's say, still 2,000. So now the fair value from 48 has become 68. Then this change, 20,000, will be nothing but accounted for in the profit and loss account. You're going to recognize as increase, or you can say gain, on the fair value of the, you can say, biological assets. एग्रीकल्चर प्रोड्यूस बायोलॉजिकल असेट हो गया, अब एग्रीकल्चर प्रोड्यूस हो गया. तीन चीजें हैं, biological assets, agriculture produce at the time of harvest, and nothing but the government grants of the biological asset. So agriculture produce is measured at fair value less cost to sell at the point of harvest. Why at the point of harvest? After harvest, it will not be IND AS-41, it will be IND AS-2. So we are talking about the mangoes which are there on the mango tree. Any increase or decrease in the fair value recognized in the statement of P&L. Note, such measurement is the cost for applying nothing but IND AS-2. So the valuation method is remaining the same even for biological asset or for agriculture produce at the time of harvest. The plants are maintained for both either bearer plant or for sale as a living plant or agriculture produce, apart from incidental scraps, are accounted for at fair value less cost of sale. Example, trees are cultivated for the lumber as well as their fruit. अगर दोनों चीज हो तो दोनों चीज है तो एक डेफिनेशन फुलफिल हो गई. You are going to get the fruits for more than 1 year. As a result, it is forming under Ind AS 41. So your valuation will be very clear. It is nothing but sale less cost of sale. Now, cost to sale will include commissions, brokerage, dealer, levies of the regulatory agencies, transfers, taxes, and duties. So this is what is going to be as a part of cost of sale. We already covered that 60,000 minus 2,000 or 50,000 minus 2,000. Any levy of the regulatory agency or any taxes which are to be paid on sale. What is fair value? Fair value is a measurement which is facilitated by grouping biological assets or agricultural produce to significant attributes. Example, by age or by quality. An entity selects the attributes corresponding to the attributes used in the market as a basis for pricing. So it is nothing but fair value, which we understand in general parlance. Contracts entered to sell biological assets or agricultural produce as a future date. For example, when a forward contract किया, will it impact my fair value? Example, I have a cattle with a fair value of 50,000 for which I've done a forward contract at 60,000. At what value should I show in a balance sheet? The answer is 50,000 and not 60, because fair value means market value, not entity specific value. So we will be showing it at 50. So we will be showing it if the fair market value of the product is 50, we'll be showing it as 50,000. The contract prices are not necessarily relevant in measuring fair value, as fair value reflects the current market condition in which market participant buyers and sellers would enter. Fair value of a biological asset or agricultural produce is not adjusted. Cost approximates fair value when little biological transformation has taken place since initial cost, the end of the reporting period or newly acquired stock, or impact on the biological transformation. So the question is how to account for this. For example, I have only 100 cattle at a fair market value of 5,000. So that is 100 into 5,000, 5 lakh. Next year, 110 cattle because of, you can say, reproduction. So how to value it? So definitely whatever market value will be the next year, let's say 6,000 is the market value, then 110 into 6,000, it will become 6,60,000. Again, the difference between 5 lakh and 6,60,000 will be gain on the biological asset. And as per Ind AS 41, it will be going to the profit and loss account. We already studied that any change in the value of the fair value will be going and treated as a part of, you can say, profit and loss account, will be hitting your P&L account. Biological assets physically attached to land, if they cannot be separately, you cannot have the separate value of it. What to do? Very simple. What will be the value of the land, fair market value of the land, if it did not have the biological asset? Let's say there is a mango trees on the entire farm, and the total value of the mango tree with the farm is 6 crores. Now you go to the adjacent place. What is the market price of the similar kind of land which did not have the mango trees? Let's say it is 5 crore. So a land with a similar admeasurement in the nearby market has a fair value of 5 crore without the mango trees. But with mango trees it has 6 crores. Then the fair value of the mango tree is nothing but 1 crore. So nothing but the fair value of the agriculture produce can be nothing but the total fair value of the land plus the agriculture produce less the total fair value of the land without the agriculture produce. And that is what even Ind AS 41 is saying. So biological assets physically attached to land, जिसको हम separate नहीं कर सकते, कुछ नहीं separate नहीं कर सकते, तो दोनों का वैल्यू निकाल लो. इंडिविजुअली लैंड का क्या एक्सपेक्टेड वैल्यू है वो निकाल लो, तो डिफरेंस होगा, दैट विल बिकम द फेयर मार्केट वैल्यू और मार्केट वैल्यू फॉर द produce. Example to arrive at the fair market value of biological assets, fair value of raw land deducted from the fair value of the combined asset. It's a very simple example I gave. 6 crore and 5 crore difference will be 1 crore. What about the profit or loss in the change? As I already told you that profit or loss will be going to the P&L account. It will definitely be going to the profit and loss account. What if we cannot measure the fair value reliably? If we are not in a position to measure the fair value reliably, then what to do? Then very clear presumption under Ind AS 41 is fair value can be measured reliably. Because if we do not have the fair value, go with the cost value. But if we do not have the cost value, you will be becoming as a exception to Ind AS 41, because Ind AS 41 scope was very clear. You should either have the fair value or the cost value which can be reliably measured. Sir, fair value measure नहीं कर सकते, cost value measure कर लो. Cost value भी measure नहीं कर सकते, आप Ind AS 41 में fall नहीं करते हो. You are not going to be falling under Ind AS 41, so you'll be going out of Ind AS 41. So if you are not in a position, inability to measure fair value reliably, in all cases, agriculture produce to be measured at fair value less cost to sale. Above concept does not apply to agriculture produce. Because there we don't go cost, क्योंकि agriculture produce का cost नहीं हो सकता, उसका सिर्फ क्या हो सकता है, fair value हो सकता है. तो वहां पे आपको market का value लेना ही पड़ेगा. A last case study before we conclude. A farmer owned a dairy herd of 2-year-old cows at April 1st, 2017 with a fair value 6240. The number of cows in the herd was 120. So if you see on 1/4/2017, there were 2-year-old cows. The total fair value was 6240 and the number of cows were 120. The fair value of the 2-year cow animals at 31st March 2018 was 58. And the fair value of the 3-year-old cows were nothing but 76. Now 1/4/17 में हम 31st March 18 में क्या हुआ और 31st March, this is what we have to account for कि fair value में change आया. First of all, what is the fair value on 1/4/17? So 6240, but that's the total fair value. It is for how many cows? 120. So if I'll divide 6240 by 120, what I'll get is 52. 125 are 6,000 and 2 rupees, 120 to 2, 240. So that's 52 rupees per cow. Now on 31st March 18, it's for 58 or 76. What should I take? See, what was 2-year-old on 1/4/17 cannot become 2-year-old on 31st March 18. That cow will now become 3-year-old. And that's why the valuation will not be on 58, it will be on 76. On 1/4/17, 6240. Increase due to price change 120 into 58 minus 52, that's 720, and increase due to physical change 76 minus 58. So technically speaking, if you see, the fair value on 31st March will be 120 into 76, which is nothing but 9120. And the difference between 9120 and 6240, it is 720 and 2160, 280. The total difference will be going to the profit and loss account. I repeat, we had 120 cows. Total value was 6240, per cow was 52. Now from 2-year it became 3-year. So पहले तो price बढ़ा 6 रुपया because year change हुआ, inflation हुआ, जो भी हुआ. And 58 से 76 हो गया because 3-year का हुआ, that's physical change. So total change हुआ 52 से 76. 26 rupees per cow multiply by 120. The total whatever you will get is nothing but the difference between 9120 and 6240. And that will be going to the profit and loss account. Because we studied that any change in the fair value of the Ind AS, you can say biological asset as per Ind AS 41 will be going nothing but will be accounted for in P&L account. So this increase of 2880 rupees will be going to the profit and loss. So we studied the accounting treatment. We had two objectives, recognition and the accounting treatment. And we have been able to understand that how the profit and loss will change. Of course, this Ind AS is very much relevant to all the industries, to all the companies which are dealing into dairy industries or into cattle industries where agriculture produce is going to be affected, or those industries which are related into production of tobacco, etc. That's ITC. So those balance sheets, if you study, you will understand more in detail about the, you can say, presentation disclosures which are there. What you need to present, what was the fair value at the beginning, what is the fair value at the end, and what is the change. And that change definitely you will be able to see in the profit and loss account. Government grants, the last point, when biological asset is measured at fair value unconditionally, recognize the income when and only when it is receivable. conditionally, then only you can recognize when the condition is met. So very clear. Unconditional है, तो you should recognize the income immediately. अगर conditional government grant है, तो income तभी recognize कर सकते हो when the condition is met. And for biological asset, it will be measured at cost. And India's 20 government grant will be applicable for the accounting of government grant. So I guess I am in time to conclude the India's 41 a standard with a lot of depth in it. I have tried to summarize it. Again, I say whatever views are presented are mine, and they have nothing to do with the institute's views. And I always say, and I always believe that in order to understand it in depth, we should always go and read the bare standard. So I've tried my level best. Thank you for listening to me peacefully. And if there are any queries or something, you can definitely write to the committee and the committee will get back to me. I'll definitely be trying to answer all that. So I once again like to say a word of thanks to the committee of CP of the ICI to give me an opportunity to express my views on the topic and to help me connect with so many members. And I'd like to thank the Central Council members and the moderator, Sakshi. Thank you so much. Over to
Thank
you.
you. Thank you, sir. At present, there is one query from our member.
Okay.
If same animal is used for sale of its milk as well as for transportation, like cow or camel, in which Indias it will be included?
If it is used for both, then it will be falling under India's 41 because one criteria is met, which is milk, and that is for more than 1 year.
Sir, but if same animal is used for milk as well as for transportation, both.
Because it is used for both, so in that portion, because milk is also there. So for see, if you will go for transportation, it will be measured at cost. But as it is giving milk, it will be measured at fair value. And that's why the change between the cost and the fair value is always going to be accounted in you can say profit and loss account. And so India's 41 will overrule India's 16 for the specific point where we studied that where an animal or biological asset is having both the uses, it will be falling under the scope of India's 41. So for going to India 16, it should be exclusively used for transportation and not for any kind of agriculture use.
Thank you so much, sir, for clarifying this query. And thank you so much for providing valuable knowledge and guidance on the accounting treatment and scope of India's 41. Now, let's welcome our second esteemed speaker, Advocate C.A. Prakash Sinha, sir, on the second topic of today's webinar, that is recent changes under income tax. Sir has completed his LLM from Amity University with gold medal. He has over 26 years of experience working in the FEMA corporate law matter, taxation matter, including the international tax and transfer pricing advisory, etc. He was also a member of the research study group constituted by NIRC of ICI on the international taxation and WTO matters. I request CA Prakash Sinha sir to please start the session.
Thanks, ma'am. A
Thank you,
very lot of thanks to you. Good afternoon to all my fellow colleagues from who are the member of the Institute of Chartered Accountant of India. Respected Khandelwal sir, respected Misra sir, Gyanchand Misra sir, respected our CP study circle or CP, our CP committee, also all the member of CP committee, our co-panelist, Sri C.A. Jiten Trivedi sir, and our moderator, Sakshi Jaiswal ma'am. It is indeed an opportunity for me to discuss something which is a very hot topic today. Although it has been said that we should discuss about the changes in the recent changes here. But I'm trying to discuss something because the recent changes in the budget are very minimal here. only because it was an interim budget, nothing more has changed here. I'm going to discuss something which is a controversial issue right now. I have divided my discussion in 4 parts here. First part, we will discuss about the recent controversy about the tax residency certificate, TRC. The second part, we will be discussing about the reassessment procedure, which is particularly for the assessment year 13-14 and 14-15, which is right now pending before the Supreme Court. Third issue, we will discuss about the document identification number, DIN issue, which is also a lot of litigated matters. And fourth issue, we will discuss about the 43BH. These are the 4 issues that I have tried to cover for that part here. First of all, a disclaimer here that whatever I am discussing is only for the academic purpose. Nothing to offend any judgment or nothing to offend any proceeding which is going before the court. Nothing to do with anything here which is pending before the court. It is only for the academic purpose and only for the knowledge sharing purpose. This is the first part that is there. Second part is that it is my personal view. It is not the view of the CP committee here. So please now pardon me if my view is not as per your views here, because as sometimes as a chartered accountant but practicing as an advocate here, we try to take something which is a bit aggressive view here. So with this coming to the issue which we are trying to discuss here. First issue that is about the tax residency certificate. The concept of residency started in Section 6 of the Income Tax Act. And it said that particularly it divided into few parts. One part is for the individual, one part is for the company, one part is for the other than company, and for the purpose of RONR and other things here. For the company, it was earlier, it was the place where control and management, where the place where the control and management was wholly situated here. But sometimes recently there was an amendment here, past few years, and it was connected with the place of effective management that is there. So generally the concept is that for the purpose of Income Tax Act, Section 6, which defines the residence test here, the purpose of defining the residency is Section 5, because the Section 5 gives you the scope of the total income, and in the scope, 5.1 is for the purpose of resident, and 5.2 is for the purpose of non-resident. So those who are not a resident, who are not qualifying the requirement of Section 16, is Section 6, they are automatically treated as a non-resident. So there is no specific definition for the non-resident. The definition is for the purpose of resident in India. So those who are meeting the requirement which is mentioned in Section 6 are the resident. Those who are not meeting the requirement are the non-resident. This is the broad concept that I'm trying to understand here. Then the issue arises here for the purpose of treaty benefit, whether who should be allowed to have a treaty benefit here. Treaty benefit, there is a Section 90 of the Income Tax Act, which says that the central government can enter into the treaty, and this treaty will be for a specific purpose. There are 4 purposes: for the purpose of relief from the double taxation, for the purpose of exchange of information, for the purpose of avoidance of double taxation, or for the purpose of recovery also. These are the few purposes which is mentioned in Section 90. Section 9, after that Section 90, there is a requirement which was there, which was earlier it was not there, but it is there that a tax residency certificate you are required to give it here. So the issue were that whether the tax residency certificate under Section 90 Subsection 2 is sufficient or not sufficient. Sometime after subsequently there is and the another clause came under the section 90, which says that the assessing officer or the department can ask any other document apart from the TRC, which is there under the further to satisfy the residence of a person who is trying to avail the TT benefit. These are the clauses that is there. Now the first issue controversy came in the case of the Azadi Bachao, and it was held that in the Azadi Bachao, where the government was defending its own circular 789 of 789 number. In this circular, it was for the Mauritius here, but it was stated that those company who have the TRC obtained from that country, they will be considered, that will be conclusive proof that of a tax residency certificate, and it will also a proof of the beneficial owner of the income of that country. This was the circular number 789, which although it was used for the it was used under section 19, and it has been used widely in various other TT issue also. I can recall many TT where we have myself has used this benefit for the purpose of TRC here. This was the in the Azadi Bachao. Subsequently, the same proposition was there in the case of the in the Vodafone case. I can recall in the Vodafone case that it was especially mentioned that once the TRC is there, that the department should not go beyond the TRC to check whether the control and management is there or not there, because TRC is a conclusive proof here. However, the court has said, there is one para, the court has said that if the purpose of TRC is the tax abuse here, then the department can go beyond the TRC here. So there is a small window was given here. I can recall that para, there is a specific para under the, in the case of the Vodafone here. Subsequently, many decisions came either by the High Court or AR. And we were assured that, yes, okay, the TRC, controversy of the TRC is now settled here. But recently, in the case of Blackstone, the case of Blackstone was that Blackstone was a company from Singapore. It had acquired certain share of an Indian company, and it has sold certain share, that share of the Indian company, and therefore it had a capital gain under, and they have claimed the exemption under Article 13(4) of the India-Singapore Treaty here. The return was filed, return was processed under 143(3)(1). However, there was no assessment under 143(3), but order was passed under 143(1). And subsequently on 31st March 2021, before the coming of the new regime of the reassessment here, 148 notice was issued to the SSC here. The SSC asked for the SSC filed the ITR, and subsequently SSC asked the region to believe, and in the region to believe, it was given that a detailed region to believe was given that why the benefit of the India-Singapore Treaty should be given to you because of your structure or because of a structure that your part is there. It was also replied by the SSC. However, the AO didn't agree with this one and moved ahead here or rejected the objection here. Based on the rejection here, the SSC filed a writ before the High Court of Delhi, and High Court of Delhi, relying upon the various judgment of the that was the Azadi Bachao and other judgment here, relied upon the judgment and said that once the TRC has been submitted, or valid TRC has been submitted here, then there is no case of going beyond the TRC. And since you could not go beyond the TRC, therefore, the reopening on the basis of not qualifying as a residency test as per the Article 4 of the India-Singapore Treaty is not valid here. So it was stated it is not a valid ground here. Although there was other litigation also, parasite test and other information that was there. But on this basis, the court was of the view that the information was available to you, and since residency test was already met due to the TRC, and TRC was submitted during the objection which was filed before the SSC, before the AU. Therefore, the High Court, learned High Court or Honorable High Court view was the view that based on this one, the reassessment cannot be opened under Section 147. The matter has been challenged before the Supreme Court. And the view that is coming from the Supreme Court is that TRC is one of the documents for the purpose of residency test, but it is not a all document for the purpose of residency test. That was the view that is coming from the Supreme Court here. I do not know what will be the outcome here, or it is not a view, but it is an argument which are being taken by the revenue here. This is the view that this month the court is still to decide this matter here. So the revenue is taking the argument that having a TRC does not conclusively prove that your control and management is situated in Singapore. And since the control can lie outside India, outside Singapore, then you may be treated, although you have been incorporated in Singapore, but you may be treated as the resident, not resident of Singapore. Once you are not a resident or valid resident of Singapore, then the benefit of the 13 force would be given to a Singapore company. That was the main argument which the revenue is taking before the Supreme Court. Let's see what the Supreme Court decides here. But for the purpose of understanding of all, we can go through the proviso by statute, and through the statute we can see that what is the provision of section 90 subsection 2, and what is the provision of section 90 subsection 3, and what was the press release which was issued at that time of when the controversy arose before the Honorable Finance Minister, and they have issued certain press release also, and through the press release they have stressed that once the purpose of the TRC is a conclusive one, and it is not for the department to go beyond the TRC and to see where the really actual control and management is lying here. So based on that part, SSC is arguing that TRC is the valid document here, whereas the department argument that TRC is one of the documents, but TRC is not a conclusive document for the purpose of residency test. I can recall one of the recent judgment of the Supreme Court in the case of the Mansarovar Private Company Private Limited here. In the case of the Mansarovar Company Private Limited, it was the issue that the company was registered in Sikkim. However, all the books of account of the company was being maintained by some chartered accountant in Delhi, and it was and the notice was issued by the jurisdictional officer, by the AU in Delhi. They have challenged the jurisdiction of the notices, saying that my company is registered in Sikkim here. How the AO in Delhi can issue the notices here? So, and it was prior to this one, say there was a search also, and the search has taken place on a office of a chartered accountant, and from the office of a chartered accountant, it was found that all the books of the companies, including the checkbook also, was lying in the drawer of the chartered accountant. And it was held that since the effective control and management of the company is situated in Delhi, so the officers of Delhi has got the jurisdictional authority to issue the notice under 148. So it may happen that the department may take the argument of the Mansarovar case before the Supreme Court here. But this matter is pending before the Supreme Court. I'm not going to discuss much on this part here. I'm just giving the brief breakup of that part here. So this was the first issues that I was trying to cover. On this issue, if there is any question, I can take up that question here.
Sir, at present we have no questions, so
No,
you
sir.
can.
No, sir. Second, which is most interesting part is that I will try to jump into the 43BH here, because the 43BH is going to apply from the assessment year 24-25. This means this is applicable for the financial year 23-24 as a previous year 23-24. And under the 43BH, a company or the SSC has to pay the dues of the payable amount of the MSME unit here, mainly the micro and small unit here, under that 43BH here, in order to claim the deduction under section 43. The issue is that here, under section 43B, if an expenses is allowable, that can be allowed an expenses. However, it is subject to actual payment. There is two part of this one. So if you are able to pay up to 31st March, then you can claim the deduction. Or if you are not able to pay up to 31st March, then you can pay up to due date of the filing of the return under 139(1), and then you can also claim the deduction. However, the second window of paying up to 139(1) is not available in the case of 43BH here. And in the case of the 43BH here, the payment has to be made to the seller who are registered with the MSME Act, and they are micro and small enterprises or micro and small unit. Then their amount should be paid within the financial year or within the previous year itself here. Then then it depends here who are the micro and small enterprises here. There is a MSME Act for this purpose, and as per the MSME Act, there is a investment limit has been prescribed that for the purpose of manufacture, who are the micro and small, and for the purpose of the services, who are the micro and small here. For the benefit of all, I can just go through the statute here, and I can find that for the purpose of the manufacture, the investment in the plant and machinery should not exceed 25 lakh rupees. In the case of the micro enterprises here, in the case of the small one, the investment in the plant machinery should not be exceed 25 lakh rupees, so it should exceed 25 lakh rupees, but does not exceed 5 crore rupees. And in the case of it was for the purpose of small, and in the case of medium, it should not exceed. It should exceed 5 crore, but it should not exceed 10 crore. So there are three part here: micro, medium, and small here. Micro, small, medium. The benefit of 43BH is for the micro and small, not the medium. So we should be very careful while reading the statute here. And sometimes it happens that we read in such a flow that we think that it is available for all, but it is not available for all. For the purpose micro, next part is that who should be the claiming the benefit. Just trying to read the law. In the same time, I'm requesting ma'am to ask someone who is there is a certain disturbance here.
हो गया तो कहाँ से यहीं से बोलेंगे ना ये कैमरा बंद कर रखा हमारी
सर आपका कितनी
43BH. 43BH talks about 43B talks about notwithstanding anything contained in any other provision of this act, a deduction otherwise allowable under this act in respect of So those deductions which is allowable under this Act, in respect of, I'm directly coming to the H, it says that any sum payable by the SSE to a micro and small enterprises, so it is not for the medium enterprises, beyond a time limit specified in Section 15 of the Micro, Small and Medium Enterprises Development Act 2006 here. So it says that those sum which is payable to the buyer, to the seller, and who are the micro and small enterprises as per the MSME Act here, they should be paid within the financial year or within the previous year itself here. Then the situation arises here. What is there any time limit that we have to pay here? The sum payable by the SSC to a micro enterprises or a small enterprise beyond the time limit specified in Section 15. So the issue arises, what is the time limit within the Section 15 here? Then if there is an agreement, if the written agreement is there, if the written agreement is there, then it is a 15 days. If there is no written agreement, it is a maximum limit is 45 days. However, in both the case, maximum days cannot exceed in 45 days here. That is from the appointed date here. So we should be very much careful here that the amount which is payable to them as per Section 15 of the MSME Act, that should be paid to them in order to claim the benefit of the deduction which is payable to them here. That is very much important. It talks about sum payable by the SSE to the micro. The issue is, what is the sum payable by the SSE? Then there is an explanation clause is there which define that what is the sum payable for this purpose, and sum payable has been covered there. What is the sum payable? Sum payable naturally will be for the purpose of goods or services that you have received here. This is the one perspective. This is the one perspective to see the law from the income tax way. So the situation arises, what is the right of the MSME entity if they are not paid within the time period? If they are not paid within the time, simplicity not allowing the deduction under the Income Tax Act is not going to help them. Yes, the buyer will be the sufferer here. So what will happen in the hands of the seller here? First, I would like to clarify that buyer can claim the deduction whenever he pays it here. So suppose that in the next year he has paid it here. So the next year he can claim the deduction. But what are the right that is there to the MSME unit here? I'm trying to bit divert particularly to see the other part of the law. Under Section 18 of the MSME Act, they can move to a facilitation council for the purpose of recovery of the amount here under Section 18 of this one. So there is a provision is there under the Section 18 of the MSME Act where a seller, particularly the seller, the right of the seller, who can move to the facilitation council for the purpose of recovery of the due amount which is payable to him. Very much important is that what is the due amount? We can see that part here. And the process of this council is just like a conciliation between the two parties here. They will try to settle the dispute and they will try to determine the amount that is payable to them. What happens if there is a arbitration process is there, and under the arbitration this amount is settled? First of all, under the conciliation, after that there is arbitration. Even if there is not satisfied, then party can move to the High Court under Section 34 of the Arbitration and Reconciliation Act for the purpose of seeking the indulgence of the High Court. Where should be the High Court should be located? The High Court, the jurisdiction of the High Court, where the Festation Council is located. That will be the Jurisdictional High Court will be there. The location of the Festation Council will be there where the supplier is located. So supplier, the place of supplier will be the critical part for the purpose of MSME Act here. The second situation is there where the MSME Act can file can have a operational character under Section 9 of the IBC Act, or whether what is the right under the IBC Act. These are the very much important issues that we should see. What will happen to the SARFAESI Act here? Can they have the SARFAESI Act? The Supreme Court has stated that right of the MSME Act is not qua the SARFAESI Act. The right of the MSME supplier is qua the Section 18 to Section 26 of the MSME Act here. So there are the various litigation is already there, and it has already been decided here. So I'm like to confine with the income tax perspective because it is many chartered accountants who are participating into this part here. Third part which I'm trying to cover is about the recent controversy of the director document identification number. After the e-proceeding has started, in fact, there was a e-proceeding. The proceeding is there through the faceless way. You can submit your reply through the notices here, and the e-proceeding has started. There was a various amendment in the law, and through the amendment, assessment has also started. And first, the assessment was there. The amendment was made. Earlier, the amendment was in Section 282, particularly the issue and service of the notices and documents. And subsequently, for the purpose of assessment, e-assessment started in 1st April 2018. And the Section 143, 1B, 1A, 1B, 1C, and 1D was brought to the law here. After that, there was a certain notification which was issued. The notification was issued in the month of September 2019, and it was there that how the e-assessment will take place here. In the same time here, government came with some circular which said that all the document that will be issued by the department that will having a mandatory DIN number, and if due to certain region the DIN number are not mentioned in the document, then they have to take the approval for the purpose of a specific approval. They have to take that why the DIN number is not there and in what are the circumstances the DIN number is not there. And it has also mentioned that in the circular itself that these are the tests, these are the parameter when an AO can or the department can issue the notice without having the number, but subject to the approval from the superior or the senior authority here. And it was also mentioned in the para 4 of the notification number that if the document which are supposed to be a DIN number here, but that is not having a DIN number, then it will be deemed to be a non-est here. And if it is non-est here, then it will be treated that it has never been issued here. Yes, this circular was circular number 19 of 2019. It was 14th of August 2019. And it was particularly mentioned that generation, allotment, quoting of a document identification number in the notice, order, summon, letter, correspondence issued by the income tax department here. So this notice, the circular was issued under Section 119, and they have said that the document identification number should be issued. The exceptional circumstances were given in the case of 5 circumstances that where the technical difficulty is arising due to for the generating or allotment of DIN number, for where the communication regarding inquiry verification is there, when due to delay of the PAN migration, PAN is lying with the non-judicial AO, where the PAN of the SSC is not available, where the proceeding under the other proceeding is there, or where the when the functionality of the issue each communication is not available to the system here. Based on this, they have given that yes, the document has to be issued through the DIN number, and having a DIN number was mandatory here. But subsequently, they in the para 4 they have mentioned that any communication which is not in conformity with the para 2, para 3, and if a shall be treated as the invalid and shall be deemed to have never been issued. So these were the department contention, and through this instruction they have said that the, they have said that the DIN is mandatory. Sir. In the same time, there was also a press release was also issued on the same day, 14th of August, and it was the same thing was reiterated in the press release. And press release has, what particularly I'm reading the one para of the press release. CVT has also specified exceptional circumstances where the communication may be issued manually, but only after recording regions in writing and with the prior written approval of the Chief Commissioner, Director General of Income Tax concerned. In cases where the manual communication is required to be issued, the reason for issue of the manual communication without DIN number has to be specified along with the date of obtaining written approval of the Chief Commissioner or Director General of the Income Tax Act. Any communication which is not in conformity with the prescribed guidelines shall be treated as invalid and shall be deemed to have never been issued. Very much important. It was mentioned that it will be treated as never been issued here. In the same time, there was a assessment, reassessment, and it was there that all the proceeding that has to be done through the e-proceeding. We took the view that since the department has issued the circular, this circular is under section 119, this circular is binding upon the income tax authorities, and therefore we are of the view that once the DIN number is not there, this document becomes a non-est, is not, just like it has never been issued to the person who is the receiver here. I can recall that there was a one debate before the House of Parliament where the Honorable Finance Minister has stated that if the document number does not have the DIN here, then you can, the destination of the document is the dustbin here. More or less, what is the issue? This issue came up before the Supreme Court. This issue recently came before the High Court, and I'm just trying to see that which of the judgment which was there before the High Court. Yes, in the High Court, it was High Court of Delhi. It was a Brandix Moises Holding Limited, and in the case of Brandix Moises Limited here, it was argument of the SSC was that since there is no DIN is there in the document, and therefore this document does not mean that it has been issued to them. And based on this part here, SSC has got the relief that the department has quashed the assessment here. I'm just reading the relevant para. The object and purpose of the 2019 circular, as indicated here, inter alia, was to create a audit trail. Therefore, the communication related to the assessment appeal order etc., which find mention in the paragraph 2 number of 2019, albeit without DIN, can have no standing in the law, having regard to the provision of section 4 of 2019 circular. Paragraph 4 of the 2019 circular. The logical squatter of the aforesaid reasoning can only be that the tribunal decision is not sustained in the final assessment order dated 15/10/2019 is the view that cannot call for our interference. As noted above, in the instant appeal, all that we are requiring to consider is whether any substantial question of law arises for consideration, which in Australia would require the court to examine whether the issue is debatable or if there is an alternative view possible. Given the language implied in 2019 circular, there is neither any scope for debate or any other leeway for an alternative view. We find that the error in the view adopted by the tribunal has simplicity applied the provision of 2019 and thus reached to conclusion in favor of the respondent. So based on this part here, High Court of Delhi has said that once the requirement of the instruction number 19 of 2019, it is 14th of August 2019, is not met here, and as per the para 4 itself, it was stated that not having a DIN number in the document will mean that document has never been issued to the party here. It's never been, and therefore, based on this part here, the High Court, now the issue recently this matter, the Supreme Court, it was the oral argument or observation of the honorable bench here that not having a DIN may be a curable defect, but it does not invalidate a document here. So therefore, the point arises here, the SSC which has relied upon the not having a DIN number, and the court view is prime facie view, it is not the order this one. So court has stayed the operation of the appendix judgment here, and still stay is there. But the court prime facie view is that prime facie, it is an oral observation is that not having a DIN does not invalidate document, but it only says that it is a defect, but that defect is curable, and the assessment cannot go even if there is no DIN number. So this is the prime facie view. It is just an oral view. We have to see that what are the orders that come from the honorable court here. What I'm trying to observe that, yes, these are the prime facie observation. Let's see what the order comes when the final argument will take place here. So with this, we have covered 3 controversies there. 4th controversy will be there on the issue of reassessment here. But I see that our honorable Khandelwal Saab and everyone has come in this one here. May I request them to speak here. After that, I can continue. Mr. Saab has also come here. Thank you, sir, for this purpose, sir.
Thank you, sir. Now we have our Vice Chairman of CP Committee, Gyanchan sir, and Chairman of CP Committee, CA Purushottam Khandelwal sir, with us. Now I request, sir, please share your insight with us.
So thank you very much, Sakshi. Very respected speakers of the today's program, CA Jiten Trivedi ji, and the second speaker virtually present amidst us, CA Prakash Sinha ji, officers of the institute under leadership of Ajit Bhai, and of course moderator Sakshi. Good evening to one and all. Friends, let me apologize first that we have interrupted the session in between. So reason being, this is the last webinar being broadcasted by the committee for this year. So it was indeed a great pleasure to welcome to our chairman sir in this program. That's why I requested Ajit ji to kindly take few moments break, and so that we could interact with the members. So at the outset, we are very much thankful to each and every member, all the speakers, all the moderators who have given their valued time during the year to disseminate their knowledge and disseminate their practical aspects, values to all the members across the country. This year we have done so many programs. During the year, the programs have been very impeccable, and if we see, the members have written a lot about the practical aspects and the dissemination of knowledge that has been done by the committee this year. Friends, we are very much thankful to each and everyone from core of our heart. And regarding today's program, we can see that the way the members have joined across the country shows the strength of the committee. And if we see, all the topics being undertaken have been very much contemporary. Will not speak much, as Chairman sir is with us. I am thankful to each and everyone, including the Secretariat of the committee, Ajit ji and the entire team that they have done a wonderful job for the whole year. We are very much blessed that this institution has come with this wonderful committee with such many programs. Friends, next year I am sure that whosoever will be heading the committee, they will take the legacy of the committee ahead, and more reforms which have been due this year, that will certainly come up in next year. So thank you for being with CPE committee whole year, and I will request Chairman sir to kindly address the house. Thank you, Chairman sir.
Good evening, respected Vice Chairman of the committee and my dear friend Gyanchand Mishra ji, learned faculty Prakash Sinha ji, Jiten Trivedi ji, and the instrumental in organizing all the programs, Secretary of CP Committee, Ajit Naji Tiwari and entire team, because today is the last webcasting of the CPE committee program organized on the virtual mode. It's give me immense pleasure to organize the whole year. I thanks to all faculty, moderators, my CP secretariat. It was great years. We did lot of programs. And then we organized a 13 national conference across the country where the Yogi Adityanath ji was there. So many chief minister was there. We have organized the 11th residential refresher course across the country and 50 workshop and seminar throughout from Jammu Kashmir to Kanyakumari, Kashmir, and from Odisha to Kutch. Webinar, we have organized 48, 10 the trainer program also organized. But this year was a unique year. We have changed lot of 3 years to 1 year, and still we have not targeted our commitment what we had given to the public at large. But the whatever the Ganser rightly said, that the missions will be continued. Whatever be heading of this committee, we had given this next work to the TCS for restructuring all the CPE portals. The virtual mode attendance will be marked by as soon as you enter in the auditoriums, or you will get the OTP. So all this manual work will be done away. So lot of pressures on the staff will be reduced. Lot of the program organization, they have to take a physical presence, they have to take a signature, then they have to upload signature on the portal. Then after some times the member is not getting a real-time updated. So we are trying our best to update on the real-time basis. As soon you entered in the auditorium, you attend the program, you will be look out the CP credit in your accounts. This year we have started to sending email in the end of the month that this CP you have completed this much spending. Again, लिस्ट लंबी हम लोग पूरा नहीं कर सकते, लेकिन जो हम कर सकते थे, हम और ज्ञानचंद जी ने पूरी कोशिश की कि हम मेंबर को अच्छे से प्रोग्राम्स दे पाए, अच्छे से प्रोग्राम ऑर्गेनाइज कर पाए. जो अपडेट करना है वो हम करने की पूरी ट्राई की थी. Thank you for attending the program. And again, I'm requesting all the members, those who are viewing this seminar, please send an email, whatever suggestion you have, so we can improve our working. Thank you so much.
Thank you so much, sir. As it is said by Gyan, sir, that this is the last webinar organized by CP committee. So I thank Gyan sir and Purushottam sir for giving me this opportunity to be a moderator of this webinar. As told by Purushottam sir, that there was a national conference held in Gorakhpur branch that was attended by Yogi Adityanath sir, and I belong to that branch only. Thank you so much, sir. You both have made this seminar a memorable one for Gorakhpur branch. So we all are indebted to you both. And I would also like to thank on behalf of all the members for taking so much initiatives for our members. The courses which you on the topics webinars is being taken by CP committee that provides immense knowledge to us. So thank you so much, sir. On behalf
Thank
of
you,
all
Sakshi, and good wishes.
Good wishes.
Thank you, sir.
Moderator.
Thank you, sir. Over to you, Prakash. Sir, you're not audible. Can you unmute?
Yeah. We have discussed three parts here. First part was about the TRC issue, tax residency certificate issue. We have just given the glimpse here. The second part was that about the 43BH issue. The third part was about the DIN number, which we have just concluded here. And the fourth part, which is the last part of my session, is about the reassessment here. The reassessment is after the COVID and after 1st April 2021, when the law had changed here. The whole scheme of the reassessment had changed. And this reassessment issue has generated lot of litigations here. Many litigation has been in various high court and other cases here. Particularly through the writ petition, the order has been challenged. And we have seen one round of Supreme Court in the case of Ashish Agarwal. And there is another round of Supreme Court that is pending here. Before we come to the another round, I will try to give something brief. What has happened? What has been transpired before COVID until now? Here. We know that on 25th of March, and in fact, around the 15th of March, the COVID was started, and it continued up to 22 also. And in the meantime here, the government, through the Finance Act 2021, first there was a TOLA Act was there. Through the TOLA, the limitation was extended wherever the timeline was expiring between that period here. And through that TOLA, the timeline was getting extended here. And in the meantime, Government-wide Finance Act 2021 amended the scheme of the 147, 148, and the new scheme came. Section was there, says same section was there, 147, 148, 148A, 1A, 148B, 148. The whole scheme came here. The all knows that what are the change scheme that change scheme was there, that they wanted to give the benefit of the principle of natural justice before issuing the notice under 148, and as mentioned in the case of GK and Drives Act 259 ITR 19. And based on that issue, the law was amended. However, the law was amended gradually in order to enlarge the scope of the 147. And it was also stated that what is the information, what is the reason to believe. Earlier, the reason to believe that was there. Now it is only information that is required here. So there was a lot of changes that was made in the statute here. Subsequently, in the statute, there was a 22 amendment in 2022, 2023, and each year the amendment has come here. I'm not going into the amendment. I'm going into the particularly the issue before the Supreme Court. The CBT has issued two notifications saying that the effect of the TOLA will be there, and the notification under the old statute can be issued up to 30th June 2021. Although the law has changed here, but the court wanted to, or the department wanted to issue the notice under 148 up to 30th June 2021. So they wanted to have a window of 3 months here for the purpose of issuance of notice under the old statute. And for this purpose, they have, through the notification, they have extended the date also. When this the issue before, when this notice came, which was issued post April 2021 and up to 30th June 2021, we took the view that since the law has already amended, there can be no notice under the old statute. The notice should be the new statute here. And therefore, the old notices which were issued under the 140 or erstwhile 148 was not as per the law, and therefore we challenged before the various high court here. And in many cases we succeeded. In some cases, one Delhi High Court judgment was there in the case of one case. I just missing this one, and that based. Otherwise, in all the cases, SSC got the relief here. And in all the cases, SSC, the High Court, different High Court has passed the said notices saying that once the new law has come, there cannot be any notice under the erstwhile law. The matter reached before the Supreme Court, and the department took the pleading that in such a way that since 90,000 notices has been issued, if they will not be enforced, the government will lose much revenue here. So based on that argument here, the Supreme Court invoked Article 142 and say that mere defect in this notice will not take away the right of the reassessment here, and where the reassessment will be done as per the new law, not as per the old law, and therefore those notices which were issued between 1st April 2021 to 30th June 2021 were converted into a notice under the 148A-B 148, and after that the department was asked to issue the notice under 148A-B so that the SSC can reply under 148A-C, and after that, based on this part, the department can pass the order under 148A-D, and subsequently the 148 notice can be issued, and after that a return can be filed and assessment will take place. However, while doing so, the Supreme Court was considered all the argument here and was of the view that wherever the defense that is available to the SSC, that defense is available to the SSC, that defense cannot be taken away, and this defense the SSC can take in the proceeding before the AO. Then the issue came here: what will happen to the notices which were issued for the assessment year 13-14 and 14-15? Since these this assessment year, particularly 13-14, the 6th year as per the erstwhile law expired on 31st March 2020, and 1 year TOLA extension, applying the 1 year TOLA extension, it expired on 31st March 2021. Therefore, we had the view that for the 13-14, the notice cannot be issued after 31st March 2021 because it has already expired. And similarly, in the case of 14-15, it was 6 year has already expired on 30th March 2021. And there was a proviso clause under 149(1) also, which say that if the limitation period of any notice which has expired under the erstwhile law, then in that case, there will be sunset. That notice will not be reopened. That case will not be reopened. Only those notices where the limitation period has not expired, in that cases, the assessment can be reopened under the new law here. That was the point that is there. These notices again being challenged before the various high court, and various high court, including the Gujarat High Court, Uttar Pradesh High Court, Allahabad High Court, Delhi High Court, in many judgments, has decided that the assessment of 13-14 and notice of 13-14 and 14-15 cannot be opened here, or this notice is not sustainable in the law. Famous judgment on this case is the Rajesh Agarwal and the Kinara and the other there. Many judgments are there. However, as usual, the revenue has challenged all this judgment before, all this order before the Honorable High Court, and the High Court has issued the notices on this part here. Now the matter is going to be listed before the Honorable Chief Justice of India in this week. It's in this month itself here, and let's see what the court decided to this matter here. But as far as the 13-14 and 14-15, what the lower court, what the High Court has decided, that there are very reasonable and in the lengthy judgment which has covered every aspect of the both the sides here and every argument of the both sides here, and based on these arguments, they have come to a conclusion that once the new law has come into place on 1st April 2021, the old law has been repealed, The old provision has been repealed by 1st April 2021. That was valid up to 31st March 2021. Then the notices post April 21st April, 1st April to 1st April 2021 cannot be issued based on the certain instruction which the CVT has been issued here, because the law was not there. So through the instruction, the executive cannot extend the law here. The law was already repealed on 31st March 2021. Why the notification is being discussed? Because after the Ashish Agarwal judgment, the CVT has issued one of the instruction that for the 1314 and 1415 can also be opened. That instruction was challenged before the various High Court, and the various High Court has struck down that instruction for the 1314 and 1415. And based on this, the court held that through the instruction, which is a delegated legislation, the main statute cannot be extended. The main statute has already over by 31st March or already repealed by 31st March 2021 or from 1st April 2021. And the new law has already come into force here. So there cannot be any notices based on the instruction when there is no underlying law is there here. Now this matter is pending. We are arguing the matter before the Supreme Court here. Let's see what happens here. Nothing to just keep our finger close here. We hope that we should not be seeing any second round of 142 here. First round, we have seen that 142 then was invoked. And second round, we wish that there should not be 142. And we will try our best for the purpose of argument. So these are the recent controversy we have tried to keep. And I have tried to keep it within the time frame here. We have tried to keep that, yes, if there are any question that I will take, not only from this 4 topic, but wherever there is any question, I am ready to take that part here. Thanks, ma'am. Thanks for bearing with me here.
No, sir, it was a very meaningful session. Thank you so much for providing immense knowledge and guidance on various controversies and recent changes under income tax. Sir, we have 2 queries from our members.
Yeah,
The
please.
first query is, if we purchase from traders, then whether Section 43 will be applicable or not. 43B.
Yes. First of all, please see whether the trader is registered under the MSME Act or not. The crux is that whether the trader can get registered under the MSME Act or not. If the trader is registered under the MSME Act here, and MSME statute has given a certification for this purpose here, then the provision of the 43BH will apply for the trader or for the supplier of the goods or supplier of the services here. The issue of the trader should be looked from the perspective of whether the trader is covered under the MSME Act or not. My point which I am trying to say, once a certificate has been issued, that it is a conclusive proof that it is registered under the MSME Act here. Once the conclusive proof is there and sum is payable to them, then the 43BH will apply. Because why is it there? Because if you read the wording of the 43BH, it says that any sum payable by a SSE to a micro or a small enterprises beyond a time limit specified in section 15, it does not say whether he is a manufacturer, whether he is a service provider. It says that any sum payable to a person who to SSE by SSE to a person who the person is, he is the either micro or small enterprises as per the MSME Act is there. So having a trader, not trader, is the issue that will arise under the MSME Act. The MSME Act authority has to see whether he is eligible for the purpose of getting registration or not. Once it is get registered, there is no leeway for this purpose.
Thank you, sir. Second query is how to get information that the creditors belong to MSME by getting declaration from suppliers or getting letter from management.
Very good question is that, and I feel that this issue has already been clarified by the CBDT also. There is a circular by the CBDT on this point here. First of all, the supplier of the goods or supplier of the service has to get registered with the MSME department, and they should have the, earlier it was the Udyog Aadhaar card, but now there is no case of the Udyog Aadhaar card, but there is another system is there that is called the QR is there, and the QR is something different. QR is called UR, that is the Udyam registration, that is there, UR. UR is now, earlier the Udyog Aadhaar Memorandum, UAM, that was there. Now the Udyog Aadhaar Memorandum has been discontinued, and it is the Udyam registration that is there. Every supplier should submit that he is the person registered with the, he is registered as a small and medium enterprises under the MSME Act. Second thing, he has to inform that these are my UR number. Third thing is that on every invoices, he has to mention that I'm registered with the MSME Act and my UR number is that part here. So unless the receiver or unless the buyer comes to know that you are a person registered under the, as a small and micro and a small enterprises registered under the MSME Act, how he will ensure the payment to you within the financial year or within the previous year. So it is very much imperative that the supplier of the goods or supplier of the services must inform the Udyami registration number, that is the Udyam registration number, UR number, to the buyer by through a separate letter, and each of the invoices that is raised here, they should mention that, they should clearly mention that they are registered with the MSME, and these are the Udyam registration number. Once they have cleared that part here, and whenever there is an agreement for this purpose, in the agreement they should also come forward with this, that they are registered with the MSME Act, they have the Udyami registration number, and whenever they are corresponding through the mail also, they should also display that they are they have the registration with the MSME Act. Once they're displayed thoroughly, displayed fully, then there is no onus on them, but the onus sit on the buyer also. Once they have done it, sale, then it is our duty to see the invoices here. And after that, when in the invoices it is mentioned that they are registered with the MSME Act, then it is our duty to comply the 43BH.
Thank you so much, sir, for giving detailed clarification on both the queries. Now, moving towards the conclusion part of this webinar, on behalf of all the members, I would like to thank the Vice Chairman, CA Gyanchan Mishra, sir, and Chairman of CP Committee, CA Purushottam Khandelwal, sir, for organizing such informative session throughout the year that will surely help each one of us to excel in our profession. As I got to know recently that it is the last webinar, I once again like to thank and give my sincere gratitude to CA Gyanchan Mishra sir for giving me this opportunity to be a moderator of this last webinar. I would also like to thank our two eminent speakers of today's seminar for providing their valuable time and imparting us with valuable knowledge. So thank you so much, sir. At last, I would like to thank all the participants for being a part of today's webinar and making this session a successful one. Thank you so much, everyone. Thank you, sir.
So nice to, ma'am. So nice to. I'm really privileged to be a part of the webinar, which is the last webinar of the CP study circle here. So it is
Same
there.
here, sir.
Yes, yes. And if any participants has any issues or any question on the tax law or in any other law, because I'm practicing as an advocate. I'm not practicing as a CA. I left my CA practicing as an advocate here. So if they have any issue or they feel that yes, or they have not concurred with our view, they can connect me directly. My phone number, I can stick that it is a 98182 I will again repeat 98182 If I on my mail IDs, I can just connect me on my phone number, or I can give them mail ID also. It is prakash@psc.co.in. Prakash, Prakash, Prakash @psc, psc.co.in. Or otherwise, you can type in the Google, you will get my detail also. With this, many thanks to Sakshi ma'am for organizing such a wonderful, or for doing the moderating session here. I'm really privileged here. And particularly, I have learned a lot of from our co-panelist member, CA Jatin Trivedi sir. And thank you, the CP Study Committee, for this purpose. Thank you.